Well, g'day there traders right around the world. What I'd like to do for you in this market update and individual trade analysis update is just take a look at our top 12 individual trade list. Again, I have summarized the three US markets in a previous video. If you want to learn and understand, what the market is looking to be doing, transitioning into and throughout April 2014, have a look at the previous video uploaded on our YouTube channel. But for now anyway, when we have a look at the top 12 list, one thing I want you to pay attention to is definitely earnings season. Now, as you can see on my screen, I've got an E here with a vertical line moving down the screen. This is simply the date upon which earnings is being announced. So what I'd strongly advise you to do if you are a trader and if you are sort of learning how to trade the stock market, one thing I'd like to say from the bat or straight off the bat is to say, never hold a position, whether it's stock or options, over earnings, because again, the outcome is completely unreliable. What I mean by that is you cannot gauge your risk if you're holding a position over a fundamental announcement, which again can either gap a share incredibly lower or incredibly higher. Again, it's pure speculation and it's not a smart thing to do, especially if you are an options trader. So for the most part, transitioning into trading beginning Monday the 14th of April, really there's a lot of shares out of our top 12 individual trade list which are sort of untradeable this week. What I mean by that is that earnings is simply coming up and there isn't enough time to actually get into a very good swing trade before earnings is announced. But as you can see on Apple, 552.50 on the bullish side and 507.63 on the bearish side. Amazon, again, look at this earnings announcement coming out. We've got the earnings date set at the 21st, which again is, I believe, next week, but it gives us a very small time frame. It gives us 5 trading sessions to enter into a trade. And where Amazon is sitting at right now, it's going to be highly volatile. So I'd strongly discourage anyone from looking at trading both Apple and Amazon leading into the trading week. In conjunction, all right, we've got AXP again. Earnings on this sucker is on the 16th. So really that's, I believe, a Wednesday. That's 2 trading sessions. It's not even worth looking at. Baidu again, this is something which is giving us a really good trade opportunity. There is no earnings announcement coming up in the foreseeable future. So 168.37 and 139.57 are my bidirectional trades on Baidu. Looking for a strong close above or below these triggers and then trading into the next either resistance levels at 177.93 or 132.62 on the bearish side. Caterpillar again looks to be consolidating very nicely up about this old resistance level here at 103. So what I'd really strongly look at doing on Caterpillar is simply setting a 105.96 bullish trigger. The trend is up, as you can see. All right, but the only thing is, again, earnings is coming up and it's on the 24th. So although it's 2 weeks away, it's not something that I'm looking to trade this week. FAS is something that we have traded, and this is a very, very good textbook, either head and shoulders or a triple top. And what we want to see is to see a strong close below the neckline. We got that on Thursday, and we saw the continuation down on Friday. Original entry was at 86.27, looking at a target down at 78.33. A really good trade on FAS. Google again. Earnings incredibly close. I mean, earnings are coming up on the 14th, so that's honestly on Monday. Not something that you want to trade, it's something that you want to trade the gap. So as of Monday afternoon, Tuesday morning, have a look at the gap, have a look at your support and resistance levels and trade in the direction of the open window. HD breaking down, this is something that we have traded. We had 2 initial entries, one at 78.74, another at 78.25. We've had 2 targets, 1, 2, and we're making our way down to our 3rd target now. So if you're not in the trade, I wouldn't force it. I'd simply wait. I'd see if we get some congestion around the support level and then set up the breakdown down to 74.38. No bullish trade set up on HD this week. JPM, this is pure, well, again, a really good textbook illustration or example of earnings. As you can see, we have had a very strong gap down. As you can see, this spinning top candlestick right here. This was earnings being announced on Friday the 11th. So again, you didn't know whether this was going to trade up or to trade down. As a matter of fact, it traded down, but what it's left us with is a really good trade opportunity. So what we can do is simply bring down our bearish trigger below the lows of the candlestick down here at about 54.55, 54.42, looking at targets of number 1 at 53.80. Second target is down here at about $51 a share. So there's a really good risk reward ratio down to the second target down here. But it'll be interesting to see which direction JPM moves coming up anyway as we transition into trading this week beginning Monday the 14th. Netflix again trading down and it's absolutely filled this window right here. Now this is great. We're at a support level, but look at earnings again. This is a fantastic week to take the week off, to go and spend some of the money which you've made in the previous weeks trading with Pivot Point, and just to take a break and rest from the market. Starbucks again breaking down, but look at this. Unfortunately, earnings again. It's the name of the game. It happens, twice a year. and it's just something you're going to deal with as a trader. So what we can do is we can almost jump into this at 68.29. Will I be placing this trade? No, I will not, simply because of earnings, and I'm happy about some of these trades we've been placing since early April to catch these breakdowns at 73.23 and then again at 72.52. We're trading down here at $68 a share, being a fantastic trade for us on Starbucks. We've been waiting for it anyway for a very long time, and it's just starting to sort of come and really sort of pay off a lot of the students in pivot point trading who have actually traded this bearish. Now to finish with, we've got XOM. XOM's just hanging out. It did have what we call a bearish falling 3 pattern. We said to tighten our stops as of Monday. Monday you would have been exited out of this trade for a small loss, but keeping that in perspective with all of the winners we've had in our other top 11, it's really nothing whatsoever. So again, learning or moving into earnings announcement, I would not be forcing a trade. Although we are starting to get structure above and below certain key areas, it's not something I'm looking at until earnings is announced. So in this market sort of update or individual trade analysis update, the name of the game is to really be patient, to wait. Do not force trades leading into options or into, earnings announcements. Just to wait, be patient, wait until the announcement is released, and then trade the ensuing gap if there is a really nice trade opportunity presented to you. So that's the name of the game. Thanks for joining me in this individual trade analysis update. All the best, everyone. I'll catch you during the week for additional updates. Goodbye.